I buy properties. That's what I do. That's all I do really, and I buy multifamily assets. It was leveraging those skills of how to build credibility with the groups. So, uh, hey Daniel, can you
I'm
go
going to
ahead and
try
mute
and
that?
mute all, and then I'm
Yeah.
going to unmute you. Okay.
All right. Thanks. Thing that I find that you have to really be very, very good at is convincing the seller you can close, convincing the broker that you're for real, that you're legitimate. And that's the hardest thing. I mean, especially, and I don't know how many of y'all are new to this game. I know that Daniel has mentioned that there's some experienced folks here. There might be some new people that want to get into real estate. And I think that some of the greatest value that I can probably give you on this short call, we have about 50 minutes left here, is I want to show you guys how to build credibility with brokers, and which bleeds into investors and sellers. Because if you're able to do just that, you can start getting into deals of your own. And I can promise you that I used to be a technologist, just like you guys, most of you guys out there. I was a CIO level guy, and I no longer do that. I focus on my real estate business full time. So maybe what I'll do is I'll share my screen. Daniel, I don't know if I'm able to. Looks like I can. All right, good. So what I'll do, okay, share screen one. All right. So there we go. All right. Can you guys see my screen okay?
We cannot yet.
Let me see here. Share screen one.
Oh, it looks like it's starting to come through.
Oh, there we go.
Yep,
All
we
right.
see.
I wasn't patient enough, it seems. Do you still see me, or do you just see just a screen when I put on the slideshow here?
You're in a small video box up in the
All right.
corner of the screen.
Perfect. As long as they can still see me, that way I can wave my hands around like the good Italian that I am, and still speak with my hands, because that's what we do. All right, very good. So as I mentioned before, my name is Austino Pentus. I'm a real estate syndicator and an investor as well. So we have a podcast of my own, and we created a really some information to help people get into this business. But so far, I've closed nearly $100 million in real estate transaction, and this is just in the multifamily side, not including the redevelopment, which is what the Rockefeller is. These are just some of the assets that we've done. As you see, the typical Class C assets, value add assets. I focus primarily on the Metro Cleveland area on purpose, and we'll get into that as to why we do that. This is the Rockefeller deal right here. So the great thing about this asset is this is what's going to look like when it's completed down here. So there's the Rockefeller in relation to this giant parking lot. Sherwin-Williams, the paint company, is going to be opening up their headquarters. They're moving in right here. That's going to bring over 10,000 jobs to this area. And here we are right next door. So what we're going to do is, this is currently office, about 50% occupied. We're going to convert it to multifamily with some restaurants, some office in there as well, like 2 floors of office. And the rest is going to be all multifamily. And the key thing, like I said before at the opening, is that I had to convince people, a guy that just moved here to Cleveland 4 years ago, that I can get this deal done. And it was not an easy deal. It was a very tough deal, but we got it done. And I'm going to share with you what I had to do it. But more importantly, I'm going to share with you some of the mistakes that people make when they're getting into deals, as well as share some of the action steps. So everything that you're going to learn today is all based in reality. It's based in not only what I had to do, but these are things that you can do as well, as you want to either grow your business from zero, or maybe even currently doing today, that hopefully you're able to pick up some information here and use it in your regular business. I seem to think that it will. So we'll keep on going here. So, but really, I'm going to try to gear this presentation here to someone that might be just starting out. Okay. But I think, as I said, I think you'll find some good information. So now, what's up with brokers? And that's why don't brokers call you back? It's kind of, that's the magic question, right? Well, I think what you have to realize is that and I think I find this happens a lot with people, is that it's not always about you. And we tend to, as humans, we tend to look at ourselves and we look for our own self-interest. And if you look at it from a broker's perspective, whenever a broker wants to get a deal done, they don't want to, the last thing they want to tell their coworkers, their boss, that, or anyone for that matter, is that they had a deal lined up and then they couldn't close. You know, they risk embarrassment, they risk wasting a bunch of time, and they upset the client and probably maybe burn that relationship too. So this is why brokers today, if you're trying to call brokers, maybe, you know, on your off time, you're trying to reach out to different brokers, maybe they're locally in California, for instance, which I know the bulk of you guys are sitting, or out of state, you're going to find that you probably don't get a whole lot of calls back, right? That's because brokers usually send those deals to their experienced buyers list. And the primary reason why they're ignoring you, all right, there's three of them. You got to be easy to work with. All right, that's what they want to work with. They want to work with people that have a high success rate in closing deals, and they want someone that's going to pay their commission. Those three things, right? It sounds simple, but you'd be surprised that that people just can't get their head around what they have to do to get over and really build the assurances that you are this person. So now I've seen and even worked with many people have made some common mistakes, and I'm going to share with you these common mistakes. And these are the ones that I personally resolved to take down a deal like the Rockefeller. So here's what the new investors didn't do. Okay. They didn't know the language of real estate. All right. We're going to get into that in a second here. They didn't have a team in place. They didn't understand what they wanted to buy. They didn't have any marketing available, like nothing whatsoever. They didn't dress and look the part of an actual investor, and they didn't have a script as to what they were going to say, right? And I mean, if you're able to nail down these 6 things, you're going to win. But we'll go through it here, and I'll share with you some background information as well as some action steps, like I said before. So knowing the language of real estate. Real estate is a relationship business, first and foremost. It's like any other business. But I think that what you're going to find is that just like you guys have at Intel, real estate has its own language as well. And if you're unable to convey and speak in that language, you're not going to come off as sophisticated. You're going to come off as just another newbie that ended up getting a broker on the phone. They're going to entertain you for 10 minutes and they're going to hang up and never talk to you again. But what you have to do is position yourself as a real investor and not as a tire kicker or an amateur, right? That's ultimately what's key here. So the way that you fix that, the way that you get around that is getting books on sales and persuasion. I highly recommend Robert Cialdini. I don't know if you guys have heard of him. He has a book actually called Persuasion. I think that's a great book. Also learn the 25 cognitive biases. Now, here's the thing. If you guys haven't heard of the 25 cognitive biases, you can just Google it. You'll find it. Ty Lopez, he's got actually a poster board that describes these things. The 25 cognitive biases is basically the software that most humans run on, right? In terms of how we act and react to certain scenarios. And I found, me personally, by learning as many of these cognitive biases as I can, I'm able to have a conversation with say, a seller, an investor, of course, a broker, and really try to overcome some of the issues that they might have with doing business with me, right? It's really understanding how those cognitive biases work, and then making your pitch to getting them to listen to you based on those cognitive biases. Also subscribe to the many trade journals and actually read the information, which I'm telling you right now. If you go to Multifamily Executive, National Real Estate Investor, there's some other ones as well. You can start off with those two. You're going to get inundated with information. Start reading the publications, understand what's going on in the markets, understand what's going on with in certain sub-markets as well, what's going on in the industry. But more importantly, try to grasp what sort of terminology they're using when they are talking about an asset, maybe they're talking about asset-backed securities. Well, what's that? You know, if you don't know what it is, learn what it is, because it may not come up when you're trying to buy your first 50-unit apartment building. But if you're able to apply a level of sophistication as you're talking to a broker, you're going to come off as knowing what you're talking about. And of course, register with the national brokerage houses to get those offering memorandums, okay? CBRE, NAO Global, Marcus & Millichap, Colliers, there's a whole ton of them, right? And now, and I'm gonna say this too, depending on the market that you're going after, because I imagine that some of you guys are going after different markets. Okay, there's certain brokers that are top notch in certain markets. Like here in Cleveland, for instance, it really is Colliers, Marcus and Millichap. Those two are the top brokers in this market. Okay, if you go to Tennessee, it might be CBRE and Marcus and Millichap as 1 and 2. If you go to Dallas, Texas, it's a big market. Maybe there might be CBRE and another close second. Or maybe even 4 of them, right? But I think what you're going to find is that different brokers have different locks on the different markets, right? And depending on the asset that you're going after, you're going to have, like, say, the bigger assets are going to go after like those top tier brokers, and you have a second tier of broker and a third tier of broker, right? And that's going to be relative to the size of the asset that you're going after. Okay, so sign up with everything anyway. Get familiar with the markets and what's trading in those markets. Absolutely critical. And you have to micro hone your market. And we're going to talk about that in a second, but I can't stress that enough. The reason why I focus on Cleveland is because I know this market and I'm here, and I've been in this market now for about 4 or 5 years at this point. And the market, I know the market, but more importantly, the market knows me. Right after we close that deal, everyone knows me now. So what does that mean? It allows access to other deals that are out there, right? And this is why, and I'm hyper focused on one market right now. When I select my next market, I'm going to be doing the same thing. And I'm going to target the top tier brokers, start making phone calls, fly down there and meet them in person. And that's going to take some time to do, but that comes later. At any rate, micro hone your market. And we're going to talk a little bit more about that here soon. So number 2, what do you do next of those 6 steps I mentioned? You got to have the team in place. Okay. And here's the thing. You need a strong team to back you up. But I think what you're going to find is the team that you put into place is going to have, they're going to have some background for you, right? In terms of what's going on in the market. And they're going to be able to connect you with other people as well. They're going to connect you with other deals, possibly, introduce you to other players in the market. Now, here's the thing, all right? This is the initial team that you need to be starting with right here. The ones in bold are the must-haves. You got to have these first, and in this order right here. The property manager first. You got to have a good, strong property manager in that area that you want to go after. Okay. And it's funny because it almost doesn't matter how much money you have. I mean, I have a friend of mine that works at Amazon, and she's sitting on millions of dollars, and she can call up any property manager she wants. They're not going to return her call, because again, she doesn't know what to say or how to say it, or to build that credibility to even get a return call. There's a certain way of handling that. And again, we're going to go into scripts later on. The thing is, though, is that reaching out to a good property manager first, any newbie property manager, you need a good, strong property manager that's been in a market for a long period of time, that's not big enough not to do the job, but not too small to do a bad one, right? And that's the key, is that, let's say, for instance, you find let's say we're going to talk about Tennessee, for instance, right? We're going to talk about Memphis. If you're going to target on Memphis, Tennessee, maybe you're going to find a property manager that has maybe 2,000 doors under management. That's not too big, right? And it's still small enough they're trying to grow your business. They're going to take your phone call. They'll probably return your phone call too. But more importantly, here's the thing: how long have they been in business in that market? In this market, for instance, I have Gary Duvall. He's become a friend now. He's been in this market for over 30 years. So I remember when I first called on my brokers, when I first moved to this place, it's funny. It was the first question they asked me: "Who's your property manager?" "Oh, Gary over at Rem Commercial." "Oh, Gary. I like Gary. Gary's a good guy." So if Gary's a good guy and he's my property manager, that makes me a good guy too. You see, it sounds simple, but it's going to take work to get that person lined up. So definitely work on finding a good property manager and line that up. Then secondly is going to be a real estate lawyer. Now here's the thing. I don't recommend going with a big firm, like, for instance, Jones Day here in Cleveland. Big firm, very expensive. you don't really need those types of people. If you're serious about this business, you'd take some time off, you'd fly to the local area, go to the RIA meetings, and really start networking with other investors, and then start asking them, what real estate attorney do you use? And I think you're going to find the same name's going to come up over and over and over and over again. That's who you need to be talking to, right? I use a local guy here. He's not a giant firm. He handles all of our evictions across the board, well over 1,000 units. And so he does business for me, but not to mention he's not expensive. And if I call him, he answers the phone. And more importantly, he also lines me up with deals and other networking opportunities, right? This goes for your third person as well, the lender. All these people need to be lining you up with opportunities all the time. You're going to want to hit them up, have an open line of communication. All your vendors need to be helping you build your business. And I think that's one oversight that many people make is when you're giving these guys business, they need to be giving you business back. Okay. So, which leads me to the third thing here, the lender. Okay. There's two different kinds of lenders here, right? I bundled them all into one. The reason why I did that is because depending on the deal size, depending on where you're buying, like from where most of you guys are located, and Daniel mentioned some of the places you are, to try to find anything less than $1 million in terms of a larger multifamily is probably very difficult to do these days. But if you were to move into, like, say, an Indianapolis or another typical Midwest city, you can still find assets for under $1 million. For those assets, you're going to want to go to a local bank. And to do that, it means you have to set up relationships with multiple local banks, right? Here's the danger in dealing with a local bank versus a broker who then pitches your deal to multiple lenders. With a local bank, it's still possible for them to commit to doing a deal and then right up to closing, pull the plug on you. Okay. That can happen. That's a very big risk, right? And you temper that risk on larger deals with a broker. Why? Because a broker has multiple chains, multiple places that they can place your deal with. And if things go bad, they can find another lender to pick it up. And that's the thing. I mean, that's why, not to mention, two bigger deals are less expensive too. That's a whole other deal. But when you're working a market, all right, and you're working a lender, try to get multiple lenders, local banks, right? And don't go after the Chases or the Bank of Americas. Those guys are not interested in doing your small deals. It's going to probably be like here in Cleveland, for instance, Huntington Bank, First National, those type of mid-tier type of banks as well. They're going to do those smaller type deals. Expect to pay more money for those deals. You're not going to get a 3% rate with IO for 3 years, with interest only for 3 years and a 30-year amortization. You're not going to get that on the small deals, because the smaller deals are actually higher risk than the larger ones, believe it or not. And when you're talking bigger brokers, Pinnacle, that Marcus and Millichap owns now, they bought them, I think, a few years ago. They're a good resource to find to get you debt on larger deals. And the thing is, though, is that same thing. You keep those lines of communications open with those guys, and they'll tell you how a certain market is trending, how busy is it, or is anything trading, that kind of thing. Those three are the three people you got to have on your team initially, like right from the beginning. Then, of course, you get your accountant, your property manager, your contractors. Those guys will help you out too. But the property manager is number one. Definitely focus on doing that. Okay. And now how you find them? Well, you get those warm referrals through friends, maybe on in this group. I mean, I know Daniel's done a great job building a huge group here. There might be some more experienced people on right now that can probably introduce you to other folks in a certain market that can help you with some of these people here. But you know what? Meetups and RIA meetings. That is primarily, when you're first rolling it out. I find that property managers don't really attend the RIA and the local meetups either, for whatever reason. So that's going to take a little bit of work to find those folks, but you can definitely find attorneys that show up to those meetups. But what you have to do is get those referrals, get an in-person meeting, create a list of 3 people in each one, interview each one, whoever you don't like, pitch them, and then eventually go with the person that you really like and you feel like it does a good job. Always test them out too. Shoot them a quick text, ask them a question, see how long it takes for them to get back to you, right? So I saw a question here come up. Where do you find out about RIA meetings? So I know typically there's every state has a RIA. So for instance, here in Ohio, it's ORIA, right? The Ohio Real Estate Investors Association, right? California might have the same sort of thing. I would imagine be CAIA, right? And then from there, you could probably dig down and find your local chapter. Meetup.com. We have one in Los Angeles. That's what we do. It's all done online. So it's mostly educational stuff. That's what we do. But there's a ton of the online stuff. I'm not a big fan of the online stuff, honestly. I prefer to do the in-person thing. I mean, maybe I'm old-fashioned. I don't know, man. But it's one of those things that when you're in this business, like I said before, this is a personal relationship business. And even though you can certainly do everything online, this is not one of those things that you're going to do online as you build your portfolio. Maybe you can do some small deals online, but I personally am a big believer in getting out there and meeting them in person. You kind of have to do that. Again, my opinion. I saw another question pop up, but I missed it.
Augustino, I actually didn't tell you. I'd be glad to look at the chat room and bring up questions that are on your current topic when they happen. And let me know, do you want me to interrupt you as we go along, or
sure.
hold them all towards the end?
No, absolutely. No. Interrupt me as we go. I mean, yeah, because if it's pertinent, let's cover it right away. I can't see them as it comes. I see like a flash.
Yeah. And use the speaker shouldn't be putting your concentration there. Here's one question from Morgan. At what size deal do big banks start caring about doing business with you?
Oh, good question. So it's going to be 1.3 million. And even then, they're kind of like, and let me delineate too. There's banks and then there's brokers. Okay. So a bank is going to be like your local bank. Like I said, let's say Huntington. I don't know. Do they have Huntington out there, Daniel?
Not around here.
No. Okay.
Portland.
So yeah. Okay. So in Portland they have it. So it's kind of, it's a smaller. It's not going to be your Bank of America, your Chase, those types of groups. Not really interested in doing those commercial type of lendings. But when they do for those smaller deals, like U.S. Bank, actually I know U.S. Bank is out your area, I believe, right? They might do it. I had a bad experience with them, by the way. But you can try taking a shot with them. Good luck. And that's the thing, it's like there was a deal that we were going to do with them. It was actually a larger deal. We could have went to a broker and we didn't. Actually, I think we did with that one. But regardless, they pulled the plug on us, and it was a terrible experience. Anyway, to get back to that question.
All right. One last question, and then I'll let you go on with the rest of your presentation. And I definitely want to get to hear a little bit more about the Rockefeller building as well.
Absolutely.
Are you a fan of loan? This is from Glenn. Are you a fan of loan structures like 30-15 balloons? If so, why or why not?
30-15 balloons. Is that like the actual debt, like getting the debt, that kind of thing? I'm assuming it is, right?
Yeah, I'm a little confused there too. I think he means in general, loans that are balloon loans, which almost all commercial loans are.
Yeah. I mean,
yeah.
Yeah, I guess. I mean,
so
every deal is different. That's the thing. I mean, every deal is structured very, very differently, right?
So maybe if I could just kind of jump in. So my question is really fundamentally around when you're looking at a commercial financing model and you're looking at what a balloon looks like, what is the time horizon that is effectively comfortable from your side of the fence on what level of rate you're willing to carry before the balloon hits? What's your duration timeline do you want and why?
Got it. Okay. All right. I'll give you a general response because every deal is different. That's the thing, So here's the thing. Let's let's talk. Okay, so I'll talk about two assets here, really quick. There's an asset we bought. It's just a regular old value add type scenario, 96 units. That deal, we got a finance through Meridian. It's a 3.4% interest rate, interest only. It means we're only making interest payments for like 2 years, and it's a 30-year amortization. Our plan calls for a long-term hold because the rate is so good. We're just going to keep it and cash flow it. We're going to make a bunch of repairs, cash flow it, maybe refi it in maybe 2 years after the IO period is up, because we're going to increase value because we can bang up the rents, right? With the Rockefeller, it's a little different, So, and I'm pointing because that's where the Rockefeller is. So the Rockefeller is a little different in that that deal is going to be investors get their money in. It's a 10-year hold, right? Because we have opportunity zone. So this is a little different structure here, because when they put their money in, as we increase the value of this asset through renovation, all the money that comes out in year 10 all comes out tax free, right? So really, generally speaking, every structure is different. That's the thing. But typical, it's going to be 5 year. We do a refi between 2 to 5 years, and with a 10-year hold, and we sell it in year 10, or maybe even keep it longer than that. It just depends, But generally, that's what it is. Hopefully, that answers your question.
It does. Thank you. Okay,
good. All right. Let's I'll keep rolling here. So then it was, we have to decide what they wanted to buy, right? The third thing that people totally missed, and the real estate sector is huge. People needed to make a decision as to what they want to get their hands on, and multifamily could be a duplex to a high rise, to a whole community of 1,000 units. It really just depends on what it is you want, and I think that people need to be focused on what it is and clear with what it is what they want. So when they do eventually call that broker or they call that property manager, they can define what it is they want. And what does that mean? What's the grade of the asset? It goes by, just like the letter grades back at school, A, B, C, D. D is going to be your war zone. If you're new to this business, I recommend staying away from Class D. I think that for many folks, myself included, right now I'm playing in the B and C area. Rockefeller is going to be a Class A when we're done with it, because it's basically going to be a brand new asset by the time we're done with it, with all the reconditioning we're going to be doing to that property. We're basically putting $80 million into that asset to really turn it around and fix it. But really, it's aside from the grade of the property, you have to know what you want, where you want to buy it. These two combinations will drive the overall price. And what type of asset do you want? Do you want a high rise? Do you want an elevator, high rise with an elevator? Do you want garden style? Do you want a duplex? What is it that you want to buy? And then really what it comes down to is identifying what it is you want. And really what it comes down to is defining your goal and how long you want to buy or how long you want to own something. I think that for many folks out there, what they're doing is I have a friend of mine who's doing this right now. He's buying duplexes. He's buying family. He's buying 20 units, he's buying 100 units, he's all over the place. And each one of these different assets require a very different strategy. So that's why if you hone in that strategy and decide what it is you want to go after, you're going to have greater success. Now, in the market today, it's very, very tough. The multifamily assets that you could have gotten, say, 8, 9, 10 years ago are very, very hard to come by these days. So you may have to scale. If you're starting from zero, you may have to scale back a little bit or partner up with someone and bring something to the table to get into those bigger assets, right? Fourth, do the marketing side of things, right? Eventually, when you do reach out to a broker or even an investor or even a seller, they're going to do their homework on you. And I'm sure there's been plenty of people on this call right now. As soon as they meet somebody, what's the first thing they do? You look it up on Facebook. You Google them. Right? You figure out who they are. Same thing goes when you are talking to a broker. Eventually, when you do, the first thing they do is Google you. They're going to look you up. And if they see that you don't have your social media up to par, you don't have your website ready, it's gonna make you look really, really bad. It puts you on your heels, right? So what you're doing is, you're going to want to get on your Facebook. If you don't have Facebook and Instagram and LinkedIn, I know some people are just anti-social media. even if you create that stuff right now, you can update a bio, get a nice company name, put your focus, like I said, the previous section, do that. Get a professional headshot, use the same headshot across all platforms. Same thing with your bio. You're doing all that. Same thing with the company name. Keep everything consistent across the board. Remove any things that can raise eyebrows off your public profile. Like remove all of your pictures from college of you drinking with your buddies. Remove any cheese boards or any type of pictures of food. Not relevant. Get rid of it. Or maybe you create a separate Facebook profile and leave one for your friends and family, and you can keep the other one for business. That's another strategy that many people use as well. Put together a website. I think most of you guys are very technically inclined, very easy to do. Fiverr, Upwork, plenty of places to get that done. You should definitely draft some good, compelling content. You can, again, get help through iWriter for that as well. People out there can write that, write it up for you. Get your business cards set up as well. You got to have business cards when you're making your meetings. Get that so you can have something to hand off to them. And then finally, get a deal launch guide. It's another word for business plan. So when I eventually started calling on brokers, I was sending them a plan as to what the asset class I was looking for. All right, what did I want to purchase? And I was the only one that was doing that kind of stuff. No one else is doing that. And you're going to be surprised that if you're reaching out to brokers and you're the one that follows up with a deal launch guide, introducing you, your partners, your team to that broker, it's like, wow, this person's actually serious about this business, right? Maybe I need to continue the conversation with them. You're gonna find you're gonna be one of the only people that actually do this stuff, right? It's kind of crazy, but that stuff works. It works. I'm telling you. So put together like a business plan as to what you're doing. So typically 10, 15 pages, something like that, with your logo as well as your plan. Now, 5, dress and look the part of investor. People make a decision based on how you look, right? In terms of what you're dressed up as. If broker, your property manager, when you go meet them, your investors, the seller, if you don't look so good, if you look sloppy, you're not going to, chances are you may not get the deal. You may potentially not get a call back. And dressing appropriately and professionally elevates your image with that person. It's almost like dressing for a job interview is what I suggest to people, right? So just try to be conservative, wear the right outfit. I did all this when I got the Rockefeller, and that's what worked. Cover up any tattoos, make sure that some people don't like it. And that's okay. I'm not anti-tattoo. I'm not anti anything when it comes to that stuff, but it's like many of the people that you're going to be dealing with in this world are fairly conservative people, especially if you're dealing with an investor that maybe wants to plunk down 300K or 400 or even more. They're going to want to know, it's like, okay, do I trust this person? You don't want to give people any excuse not to do it. If you wear cologne, don't make it strong. Maybe I would even advise against wearing it at all. But if you want to, make sure it's a very light fragrance, not to offend anybody else, right? And of course, having a script of what to say is absolutely critical. The tone of your voice is going to be, and in your conduct, all play a part into the impression that you make. And that impression will either be positive, neutral, or negative. And practice what you're going to say ahead of time. And one thing that I often recommend when you're calling on brokers is call on brokers that are not in your immediate market. So let's say, for instance, some of you guys out there are targeting Oklahoma City. Don't call brokers in Oklahoma City. Instead, call brokers in Dallas, Texas, and practice your script with those guys. Okay. And if they don't call you back, that means you may have to change your script. Okay. That's the thing. If you're calling a hard market like Dallas, because it'd be hard, I would imagine, be a hard time to get a call back out of those guys these days. But if you do, and you practice your script and they're calling you back, then you can practice on the market you want to go in. Because the last thing you want to do is start calling on people in the market you're attacking, and then you're not getting a call back and you burn those leads. You don't want to burn the leads, right? You want to practice first, practice what you're saying, nice and clear. You sound professional. This is an example of one we wrote here. So it's geared for like an out-of-state type scenario. Take a look at it, use it. I think you can get some benefit out of that as well. But it's that opening statement that's going to present to you or present what sort of person you are, and your ability to close eventually with that guy. So as you go down the road, okay, to get that first deal, the three things you got to stay focused on is integrity. Do what you say you're going to do. There's been a couple of deals when I was dealing with a newbie, I was selling to a newbie. They did not do what they say they're going to do. And it's very, very frustrating. And it causes, that'll make you never get a deal ever again. If you do get it closed, because the brokers all talk. They all talk to each other. The property managers talk to each other. They talk to others in the industry and in the business. You don't want to get a bad reputation. It's all reputation driven. But communicate on a regular basis. Over communicate if you have to, and then make sure the team stays engaged, right? And the thing is, though, one thing that many people don't do is they don't take action. You got to take action in this business, right? You got to take action in this business. It's the podcasts are great as long as you are taking actual action towards your goals, documenting your goals. Get into get a mentor. Groups like this are phenomenal. But start with actually getting out there and try to meet other people as well. And become obsessed with your mission statement as well. That's what I had to do to build my success in this business. Analyze at least 100 deals a week is when I was starting out, that's how I actually found my first deal, by analyzing 100 deals a week, inside my market, outside my market, getting an idea as to how the numbers work. Now I can just listen to a deal, the deal structure, and I can tell you in seconds if that's a good deal or not. That eventually you get that good when you analyze enough deals, right? After you do all that, then it's your time to reach out to brokers. So there's some effort that has to go into building this up ahead of time, right? And the thing is that you're going to have to take some risks, but do that first by setting some goals, right? And for many of you guys out there, I'm telling you, this is a great way to supplement your income. I'm as a former technologist, as I mentioned before, it's been a phenomenal change to my life. I'm going to tell you right now, it's going to be like, if you follow through with this business, you do some of these things that I mentioned here, you're going to be great. Just realize you have greatness within you. You're more powerful than you can imagine. You're greater than what you're going through these days. So good. So I'm going to wrap up this part of this section with this. Believe it can be done. If you believe in it, it can be done. Your mind will make it happen. And that comes down to the goal setting aspect, which a lot of this is driven with mindset. So maybe, Daniel, I wanted to get through this as quickly as I could so I can answer the questions and talk more about the Rockefeller. So I've been watching my time. So hopefully, since this is being recorded, people can go back and try to gather some of the information out of here.
All right. At this point, I do not think we have any questions that are due. Actually, what do deal structures look like with your investors? Fixed interest or part of the deal? So I think he's asking equity versus debt for your investors. Good.
Yes. So typically speaking, a deal structure might be like a 70-30 split. So if you think of a regular asset, it's 70. So there's a GP, the general partners, and the LP, the limited partners. The GP is the guys that are setting up the property or setting up the assets. So like, for instance, I locate the property. I'm the one is putting it all together, or me and my partners, we're the GP, and the LP are the people that are bringing the money to the table, right? The money being the equity side of things, right? So it's a 70-30 split. The LP owns 70%, the GP owns 30%, right? That's typically what we do with a deal like that. Hopefully that answers your question.
Yeah, that's very standard. That's what my company does as well, and I think most syndicators do.
Yeah. And then Amit asked, where do you find your deals? I think, right? That's probably. And here's the thing. When I first started, it was tough and it was slow going, and all the things that I told you guys today is what I had to do to get that first deal, right? It's funny when you close a deal like the Rockefeller, I'm literally getting messages every day, all the time, with people that want to meet up for lunch and talk about it, because it was, as I said, it was a very tough deal to do. And maybe I can, we still have a little time. I can probably share some stories about that, right, Daniel?
Yeah, let's talk about the Rockefeller building for a
Yeah,
little bit, and we can follow up with questions a little more towards the end.
yeah. So the Rockefeller deal, as I mentioned earlier, it was John D. Rockefeller, the oil tycoon. He's one of the great industrialists of the late 1800s, early 1900s, richest man on the planet, right? I think even by today's standards. And it's funny, his influence of it still exists to this very till today, and that's why it's a great honor to actually own this asset on the National Historic Registry. So this, and along with a handful of other properties. At one point, this was the tallest building in Cleveland. Not so anymore, but it's still a great asset. Now, the property itself, I'd say back, I don't know, 15, 20 years ago, Cleveland wasn't exactly the up and coming place as it is today, right? So the gentleman who bought it, he bought this property. He bought a bunch of other properties, probably at a huge discount. And a long time ago, as I said, maybe I think he's owned it for like 50 years. And he sat on it, didn't do anything with it, And when Kenny Wolf, who's going to be coming up here in January, he's going to be speaking on some other topic. When he's in Dallas and I'm here in Cleveland, and I heard through a friend that this deal was about to trade. I mean, they were working on nailing down an agreement, and we snuck in behind them and wanted to fight for this deal. Kenny and I were driving down the street. We saw this thing. We said, "We got to have this deal. We need to have this deal." We knew that Sherwin-Williams was going to be moving next door to us, and we saw the opportunity, and we knew we had to have it. It is the last historical property in Cleveland of this type that we can still buy and take advantage of, all aside from the historical assets, the opportunity zone, the tax credits, all the things that come with an asset like this. So we make a run for this deal. Now, like I said, there's already another group in play, and we bid. I think at the time we bid $12.9 million for this asset, and we were outbidding the other guys by $200,000, and they ended up. I think it was at 12. I'm sorry, 12.7, and the other guys came in at 12.9, and then they said they verbally told us they're going to go with us at 12.7, and then the other guys then the other guys outbid us, and then they ended up working with those other guys. So needless to say, I was pretty upset about that. Fast forward a couple of months, they couldn't close the deal. They couldn't get the deal done. They just could not get the deal done. They couldn't raise the money. They couldn't get the financing. I'm not clear as to why they couldn't do it, and I don't know. It's not my business. I don't care, right? But then they came back to us and they asked us if we wanted it for 13.2. So fine, we did the deal at 13.2 million. And now, and like I said, it's very, very. It was difficult because of the fact that it was only 50% occupied. Difficult in the fact that right when we had this deal locked up just before all this coronavirus stuff really hit, right? So we had several lenders lined up to do this deal with us. And so we weren't really concerned about the lenders. The investors, we went out, we got to work and raised the money for this asset. There's two phases here. The first phase is the acquisition, and the second phase is going to be the build out. And so we got to work raising the money for the first phase, and which was the total raise is only like $15 million. So imagine that, guys. You got $15 million to raise to leverage it into $110 million asset, right? And the only way it works is because of all the tax credits that come along with it. But anyway.
So, Augustino, we actually have a question about that.
Okay.
The question's from Vera. How are the tax benefits with the Rockefeller Center different than other multifamily deals?
Oh, wow. Okay. So because there's several things here. So This is going to be a conversion, right? So unlike a typical value add asset that we might buy, like give an example, there's another asset that I'm waiting on a purchase agreement or a signed LOI from. It's over in Brooklyn. It's just a regular old 90, I think it's 95% occupied. It's cash flowing, very easy, C-class asset. We're going to go in there, maybe renovate some of the units, bang up the rents by a couple $100. For a lender, standard issue, nothing crazy, very simple, low risk, right? This deal that I'm looking at right now, to me, it's not high risk because of what's going on around us, but it's downtown. And because of the opportunity zone stuff that's gone on, I think it was Donald Trump that put in this whole opportunity zone for many cities across the nation. This gave a huge tax benefit to people, right? So if someone puts in, like, say, $400K as an LP on this deal, okay, today that $400,000, when we finish the build out in 2 years, we're going to start cash flowing this asset. Now, keep in mind, you're in for, like, this is a $15 million raise. At the end here, in 10 years, or actually at the end of really 2 years, when we start cash flowing this thing, this asset will be worth $110 million. The $110 million is all driven by cap rate. And it's driven by return, right? When you take this and we put 400 units in this thing with multifamily, along with office and along with restaurants in there as well, that's the primary driver. So now you're going to be in this giant value add asset here. And then at the end of 10 years, when the opportunity zone scenario is completed, all that money comes out of the deal tax free. That's what opportunity zone does for you. It's phenomenal. So aside from that, you also get state tax credits as well, right? So those state tax credits go right to the bottom line. So that's how we're able to leverage that $15 million into, like, these tax credits. It's almost, think of it as it's like a guaranteed loan, so to speak, right? Guaranteed loan with no recourse. And there's other stacks that go on top of it, same sort of deal, right? It's the only way that these types of deals, these old historical buildings, it's the only way to make them work. I mean, if we were trying to go and get a regular loan from a lender for $80 million to turn this into a real nice Class A property, it wouldn't make economic sense. But with all that money coming in behind us, it makes total sense, right? It's a real big boom. So I hope that answers the question.
Yeah, it did. Thank you. Appreciate it.
Yeah, good. Dana, was there any other questions on this one?
Yes, we've got two questions
Sure.
about COVID, particularly one is about the housing market, but and the other one's about the commercial market. I think we'll focus on the commercial market first. We have 5 minutes left, by the way. And it says, with COVID, there are many that are fearful of commercial real estate, with the belief that a permanent shift of workforce to less total square feet is needed. Are you seeing pricing reflect this fear?
Pricing in terms of pricing of the asset, or pricing of the rent or rental?
They mentioned square feet, so I'm assuming it's a rent per square foot. I mean, basically, is rent dropping due to COVID? Would be my take on it. Pricing of the asset is what he's asking about.
Man, Glenn, I'll tell you what, man. I wish it would, because just before this call, I got off the phone with a broker who sent me a Class C deal in I forget where it is, on Mayfield Heights, all right, which is it's part of Cleveland, for $75,000 a door. Now, to you guys, that's cheap, right? For here, that's tremendously expensive, right? I mean, I just put an LOI in that one deal I just told you about for $45,000 a door, and I thought that was expensive, right? We're not seeing that anywhere right now. As a matter of fact, Cleveland's still one of those markets that few people know about, and we're seeing some cap rate compression here, meaning the cap rates are going down, and that's causing the cost of the asset to go up. And it's primarily because the cost of the money is so cheap now. The cost of money is cheap these days, so, which is one of the drivers. So no, man, I mean, it's kind of like, it's quite the opposite. We're seeing that we're seeing the prices of these assets continue to climb, And I mean, I see the Rockefeller being one of those. We're fairly conservative with our numbers on the Rockefeller. I'll tell you that right now. And I mean, I think it's going to be a home run. An asset that I bought, and I'm friends with many brokers here in the city because it's my job to be. We just paid $30 a door, and all my broker friends say, "You stole that deal. You stole it, easily stole it." There's nothing trading right now for $30,000 a door these days. Nothing. This might be one of the last ones for 2020 that we picked up. So in this condition, in that market, so it's crazy right now. So no, man, we're not seeing any of that stuff now. Definitely in some markets, there are challenges when we're trying to collect from a C- tenant. So that's definitely happening. And there's some protections in place. I'm sure you guys see that if you're in a blue state, you're going to see plenty of that stuff happening out there. It's not a political discussion, just saying the truth. But that is happening. It's a real thing, unfortunately. But the bigger the asset, the easier it is to manage around it. So, yeah.
All right. I don't think that we have any other questions at this point. So, Augustino, why don't you give your contact information and let everybody know how they can get in touch with you?
Absolutely. So bulletproofcashflow.com. We're all over Facebook, Instagram, Twitter, of course, LinkedIn. Feel free to reach out, say hi to me. I always love talking to people. If you ever want more information about the guide to finding a broker, if you go to bulletproofcashflow.com, you just fill it in there and you can download there's an ebook around it too. So I know I kind of rushed through it. But I hope that will give you plenty of value as to how to break into those other markets, because that's the only way you're going to find deals is if you practice and go through those 6 items that I mentioned.
All right, Augustino, thank you so much for coming and sharing with us.
Yeah, thank you.
Have a great weekend.
Yeah, you too.